back again. Welcome, Hamish, Ben, PB, for another episode. I'm not sure that Berk Britain Quarantine TV is going to stick, Ben, but we've used it a couple of find a better name. You got a suggestion, Hamish?
Yeah, well, it's very good. I don't know what happens when the lockdown comes out, though. We've got to keep this thing rolling.
I know. That's going to be the challenge. The challenge is to keep it rolling, but keeping it simple, keeping it raw, I think is the key. So, as we've done previously, we had a bit of a chat offline before we started recording. Talked about some of the more topical things. We might jump straight in, Ben. I know you had a question of Hamish. Do you want to throw that his way?
Yeah, definitely. And I think we've already had lots of questions from clients coming in, and this one's going to be it's sort of the one that gets the ball rolling probably with these offers. But NAB bringing out their share purchase plan with the discount offer is an opportunity for clients that they need to be assessing. So, Hamish, if you could just give us a bit of an overview of that one and what we should be looking for there, which will probably set us up for assessing future offers, which we anticipate will probably come through for other companies as well.
Yeah. So, yes, so as we sort of discussed, what you saw through the GFC were that businesses started to do capital raisings, and we expected that we would start to see that happening, and this is obviously starting to happen now, and NAB's one that's live at the moment. So the first thing is why these businesses do it. Obviously, when we have a shock like this, businesses' revenues and therefore cash flows and liquidity takes a hit, and so banks will often want businesses to go and raise more money to shore up the balance sheet. So when they do that, they'll give existing shareholders the opportunity to apply for more shares, and typically that's done through one of these things called a share purchase plan. With a share purchase plan, you can apply for up to an additional $30,000 worth of shares, and it can be a smaller amount as well, $5,000, $10,000, $15,000 as well. Now, with NAB specifically, the maximum price that you pay with that offer is $14.15 a share. Now, that compares to NAB's closing price yesterday of nearly $17. It will probably be around $17 today. So you get the opportunity to buy shares at $14.15, and the share price is nearly $17. So that's a substantial discount to the current market price. So it then becomes a really attractive way for somebody that does want to increase exposure to shares to say, okay, well, you know, the price is up here and I can buy it down here, and it becomes a very low risk way of actually increasing that exposure.
So to be eligible for that plan, you obviously have to hold the shares already is an important thing. So if you don't have the shares already, you're not going to be eligible for that offer. Was there a date? I actually didn't check what the date was you needed to hold them at, so just people were aware.
Yeah, it's a good question. So what they're doing now is, at the moment, these businesses will announce the capital raising, and basically that you have to already be a registered shareholder as at the date of that capital raising. Yeah. And for NAB, I think that was probably about midway through last week. Yeah. Which basically, for any of your clients that have held NAB, I would assume it's going to be applicable for all of them.
Yeah. Do you expect to see the share price on the market come back down towards that offer price? Is that a natural reaction to?
Yeah, absolutely. It's a very good point. So often what you'll see as a business does this capital raising, shareholders will sell shares on the market to buy the shares through the offer at the lower price, and so that has the effect of actually pushing down the price as well. So typically, you know, the price will come down because of the capital raising, and in addition to that, you get it to buy it at a discount to that offer, to that market price as well. So
yeah, so probably people just need to be aware that there'd probably be some volatility in that share price while these offers, you know, not just NAB, but other ones coming up, is that around those times expect to see a little bit of movement, probably from the impact of the offer.
That's exactly right. Exactly right.
To some extent, Hamish, look, I think that's probably what you were referring to a moment ago. There's sort of a natural dilution of the value a little bit because there's more shares that are, you know, if they add up, you know, several million more shares, then clearly the value per share is diluted a marginal amount.
Yes.
But that wouldn't be $3 worth, would it?
Yeah, exactly. So typically with the businesses that we're owning for your clients, where they're very big businesses, the dilution uh, as far as these sort of equity raisings are concerned is not overly significant, and so it can become quite lucrative in that, let's say you have a client that owns $5,000 or $10,000 worth of NAB, and if they were to apply for $20,000 or $30,000 worth of NAB, even if they only got half of the allocation, that they may have doubled their holding in NAB, which is far greater than the dilution of the capital raising. So that's where retail investors can actually win out versus the institutional investor that could get diluted through that.
Just one other question. When we take the opportunity to take this share offer, those shares don't come with the dividend in July. So what sort of value would you put on that not getting the dividend? I mean, that's of any consequence, or that's almost insignificant?
Yeah. So to be precise on it, the NAB dividend is 30 cents fully franked. So grossed up, that's 42 cents a share.
Yeah. So that's a pretty insignificant thing to give up if you're going to pick up, $2.50 to $3 worth of share value.
That's it. So NAB's looking like it'll open more than $17 today, but let's say it's $17, less than 40 cents. So it's roughly $16.60 versus the $14.15 offer price. So that's about a 17% discount.
Very good.
I suppose just probably a word of warning on this is that there's going to be more of these offers most likely. So we don't want people to feel that if they're going to take it up that they need to be going, all in on an offer like this, because you need to still be conscious of your overall portfolio, and you need to be conscious of other offers and opportunities with that cash that we do have available.
Exactly right. It's a really important point. So the one thing to be conscious of with these share purchase plans is, whilst you may apply for up to $30,000 worth of shares, you won't necessarily get that full allocation. And so what you don't want to do is go selling other shares to take up the $30,000 offer and find that you only get $5,000 worth of shares, if that makes sense. So you need to balance that. That's one thing. And then the other thing is, if you did apply for the $30,000 worth of shares and you did get fully allocated, then after that, there needs to be an assessment made to determine, do you have too much exposure to that company at that point in time, and should we be, reducing some exposure by selling some shares on market?
Yes. So as a flow on from your point, Hamish, and Ben's question, if we did take too much of the available cash and grab NAB because we think it's a really good deal, and then suddenly there's another offer available, we may well want to downsize NAB after we get the allocation, but those monies are tied up and maybe they're not available for the next offer that comes out. So it's about when those offers are available, I would imagine.
That's exactly right. And exactly. And that's why we also want to be choosy in terms of which ones we go for. So QBE was an example of one that still hasn't closed yet, but that offer doesn't look attractive. The offer price is $8.25. The market price is about $7.80. So you can buy it on market. Now the offer price will get revised down, but you can buy it on market at the same price. You're better off letting that go, preserve the cash for other options that may come through.
This might be a question for Ben or Hamish. Is there any of our clients that this doesn't apply to? So those that can't participate, whether it be, we've got obviously clients that own in shares individually, those in self-managed super fund, and those on platform. A lot of them with North Investment, pension, super. Is there any that it doesn't apply for? Or is it available to all of them?
Hamish, as far as I know, they're all applicable. So those offers will start to get raised. Probably just to be conscious of anything on the platform. Generally opens a couple of days later and closes a couple of days earlier. So it just squeezes timeframes a little bit, but we'll communicate anything with clients as we need to around that. So I suppose just with that is, if there's any offers like QBE that come up that we're not going ahead with, don't expect to necessarily hear too much about some of them. We won't bombard you with heaps of information, but don't be afraid to ask us if you do find one yourself. I know there was an offer for, I think it was Ramsay Healthcare last week or this week, that was going on. It was only a couple of clients out of our whole base that actually had a holding in it. So we dealt with that one just with those couple of clients. So not everyone owns NAB. There's some that do, some that don't as well.
Good. We might change tack a little bit. PB, you had a question or sort of want to talk about some of the international assets we hold with particular reference to Berkshire Hathaway.
Yeah, again, this is one that we're only able to hold via you on our self-managed platforms, but you know, the 60, 70 odd people that are on self-managed, a large proportion of them now, including myself, own Berkshire Hathaway, and I really like the company. I like the concept. I like Warren Buffett's philosophies. But clearly, in recent times, there's been a few issues, and I mean, they got out of all of the airlines in America, which was, suffered a fairly significant loss. But maybe long term, that'll be a great decision. And the recent AGM, the profitability issue was raised, or the lack of profit, or the down. I mean, maybe if you could just tell us a little bit about Berkshire Hathaway, and I'm not at all worried about it, but I'd just like you to reassure us and all of our clients around the holding and why we keep holding it, if you could, please.
Absolutely, yeah. So Sunday morning in Australian time, Berkshire held their annual general meeting, which is a very famous event now. There's about 40,000 people that typically fly to Omaha from around the world to see Warren Buffett speak. And it was great because it was actually held online. So I was able to watch it from my living room for 5 hours, which was very enjoyable. But look, a couple of things out of it. So in simple terms, Berkshire has an insurance business, and then it also has an investment business. So it invests in listed companies and it also invests in private companies. And so in many ways, it's almost like a fund or a listed investment company. You own one business and it gives you exposure to lots of different companies. I think he also holds a huge amount of cash, about $130 billion of cash. And so the world has been watching him to see what he's going to do with this cash. And he basically, in simple terms, he hasn't really done anything with the pandemic. He's sold out of his airlines, but he hasn't really spent a lot of that cash. And everybody's sort of saying, oh, is that meaning that he's bearish and, he thinks the market's going down? And I think I'd be very careful in reading too much into that. I think there's a few nuances around that. Berkshire's price, so if you add up the value of all of the businesses that they hold, they call that the book value of the company. And Berkshire typically trades at a substantial premium to book value because what they call the intrinsic value of the business is worth much more. Because of the price of Berkshire has come down, it's now trading almost in line with book value, which basically is saying if you sold all of their assets and returned money to shareholders, you would end up with that amount of cash back. Now, the reality is because of what Berkshire is, the business is worth a lot more than that. So from a long-term perspective, I would think that it's actually very attractively priced. The only other thing I would say from that AGM, what was most pleasing, Warren Buffett is 88 now, unfortunately, and so he won't be around forever. And so the big question is succession. And he has thought very deeply about this. And there's basically two guys that will sort of step in to fill those shoes. And one of those people is a gentleman by the name of Greg Abel. He sat with Warren during the AGM, which was basically the first time that he has actually presented. He's an incredibly impressive individual. And for me, that was the biggest takeaway, that, if and when something does happen to Warren, I think that this guy will be a great, steady set of hands to take over the business. So that's great.
Thank you.
Hamish, with probably a flow-on effect from, or a segue from your comment about whether or not Warren Buffett feeling and Berkshire Hathaway feeling bearish about the market at the moment. That's probably the million or billion dollar question, is where is the market in the cycle that we've spoken about in some of these videos in the past. Market had a bit of was it late last week with the US dollar cues seemed to spook things, with the Aussie market down circa 5% on Friday.
Yep.
My memory serves me correct.
Yep.
again, I don't expect you to tell us when the bottom is and where we are in that cycle, but your sense of where we sit in that cycle. Ben mentioned something in our prelude to this video about people are tending to play that bit of a waiting game at the moment because is there a sense that that previous bottom of March will be tested? I know it's a pretty long-winded question, mate, and I expect a very concise and simple answer from you, but your thoughts are welcomed.
A nice, concise answer. Nobody knows. But you know, as we've sort of as we've said, you know, I think we've passed that point of maximum uncertainty, that panic stage. We've seen a relief rally. The general consensus would be that we have a pullback from here. And if I was to have a gun at my head, that would be my gut feel. But nobody knows. And the only thing I would say is the fact that so many people expect the market to have a bit of a pullback from here, in my experience, often means that it doesn't. Yeah. Now, in saying all of that, I think to what we were talking about at the start, if we see some of these placements coming through, that's, if somebody's looking at putting money into the market, that's a phenomenal way to be able to add additional money to the market because you're buying at a discount to the market price. So that,
yeah. Thanks, Hamish. Appreciate that. Now, mindful of time, we've got to get off and get onto a team meeting. One thing we didn't talk about, or sort of we mentioned beforehand, that you, I think, have done a short video specific to share offers, and we might be able to post that up separate to this on our private client page. So yeah, look out for that. But we appreciate your time again, Hamish. Thanks, Ben. Thanks, PB, and we'll see you same time next week.
Thanks, Hamish. Always great, mate. Thank you.
Cheers.